Almost afternoon. We have an impromptu live session here for you because lots of action out there in the financial markets. I've had a exciting morning, and we're going to be talking about the stock market today. We're going to be talking about how stocks are tanking. They've taken a little bounce. It's now 11:49 in the morning. You should have seen it, RJ, this morning, 7 o'clock. 7:30 when the pre-market opened, it was a bloodbath out there. We're going to talk about why stocks are tanking, but the most important question we're going to be talking about is what does this mean for the real estate market? Is the real estate market next? Are we going to see a massive down move in houses, in properties, in real estate? What does this mean for the Fed? This is coming on the back of last week when we were talking about the jobs data that came out. The jobs data came in weak, right? Unemployment's ticking up, right? So with that being said, RJ, how are we feeling today, sir?
Great morning today. Ready to rock and roll. Had a good weekend. A lot of family things going over today. I have a 3-mile run I had a plan today. Taking care of myself today. Taking care of our business today and this morning. A lot of things flying around this morning. And I did see a lot of news in the stock market. I don't play in the stock market. I don't. But maybe I should, I'm not opposed to putting money where it can grow. Right now, I put my money in other financial, places like insurance. I'm running the insurance play, but this is a new thing for me to understand. So probably some questions coming from me on this one. But we want to let you know that when a market like this is tanking, which is the stock market, there's opportunity elsewhere, and a lot of that points to the real estate market. So happy to get into this today. Sounds like you had a pretty busy morning regarding this, and so let's get right into it.
Well, the stock market's the stock market is a great way to grow your money, right? Not necessarily make your money in real estate, make your money in business, make your money, um, in just that real estate and business and flipping houses and doing what you do and the cash out refis and whatnot. That's how you make money. But if you want to grow your money, what rich and wealthy people do, they grow their money in the stock market. It has the opportunity to provide a much bigger return than just sitting on cash. And what people like about it is it's still pretty much liquid. You can trade pretty quickly and sell stock pretty easily and convert it back to cash. So it's way more liquid. Anywho, I like to follow this stuff. And this is the NASDAQ. The NASDAQ is basically the stock market, RJ. This is like thousands of companies that are, grouped together in a giant group called the NASDAQ. S&P 500 is a group of the top 500 companies in the US. And the Dow Jones is only 30 companies. And this is like the old way, the old stock market. Like you don't really look at the Dow Jones. It's like 30 companies. If you really want to get a good grasp on what's happening in the stock market, you look at the S&P 500 and you look at the NASDAQ. So that's what that is, just to explain it. And in other countries, they have their own stock market. So in Asia, for instance, China, you got the Hang Seng. That's the Chinese stock market. In Japan, which we're going to be talking about right now, because this is what's kind of the contagion effect going on. The Japanese stock market is called the Nikkei. And look at this, RJ. This is like insane. 12.40% down. And the reason the Nikkei is selling so hard right now, it all goes back to the central banks. It all goes back to the Fed. It always does, right? So the Nikkei, hang on one second. I got a sneeze coming on, RJ. The Japanese central bank for the last 40 years, RJ, has been extremely dovish. They've been extremely loose with their monetary policy. Low rates, cutting interest rates, just very loose and easy monetary policy. as you know, here in the US, over the last several years, we've tightened our monetary policy, right? Rates have gone up. That's not the case out in Japan. But with inflation starting to trickle in, inflation coming in here into Japan, the Central Bank of Japan just announced that for the first time in 40 years, they're going to start raising rates. And that is why their stock market is selling off. And this is bleeding into our market. A couple of reasons, mostly because of this, though. This is mostly the reason why things are selling, is because the Japanese central bank said they are going to be raising interest rates. People are selling, getting their money out of the Japanese stock market, and that is bleeding into the US stock market. We're only down 2.85% right now, but we were down over 6%. And that's a huge, it's like a Black Monday. It's like a 1987 stock market crash. 6% in a day is massive. But we're starting to bounce a little bit here. But what does this mean for real estate? That's what we are going to get into. Any questions that come up for you right now, RJ?
Well, first off, I didn't even know there was a Japanese stock market. Second of all, Japan and China are in a whole different part of the world. They're a little day ahead of us.
Oh yeah.
So is it advantageous to take a look at their things going on in their market? Is it like in the real estate market, things on the West Coast are typically good indicator of what's going to happen to like Midwest markets or the markets in the middle of America, right? If we are looking at things on that side of the country first, which is the Chinese stock market and then the Japanese stock market, is that a good indicator of what's going to happen in our market? Does it happen there first and then trickle into us?
Excellent question. So it's not necessarily just that particular stock market to keep an eye on, but it is all connected. Everything is connected in this entire world because everything is derived. Every single market is derived off two things: fear and greed, right? Greed is when people are buying, I want to keep making money. Fear is I'm selling, I'm scared, right? When fear enters the marketplace. So something can happen in another market like Japan or China. For instance, there's all sorts of worrisome about Chinese invading Taiwan. If China was to invade Taiwan, yes, that is not within the US borders, but it's going to affect the US stock market because fear. People get scared. There's a lot going on in the Middle East right now. Iran is threatening to attack Israel.
Did see that.
We're not in Israel, but you're damn right. I mean, that's basically World War III, of course. So yeah, it's good to keep an eye definitely on everything happening in the world because everything ultimately is connected. And that's what's going on. So their market's crashing and it's just kind of bleeding into our market. But like we kind of mentioned, the jobs data is coming in weak. We're like heading into a recession for sure. And it's going to affect the stock market. So with that being said, we're going to kind of get into like, what does this mean for our federal central bank? What does that mean for our Federal Reserve? Because the reason Japanese stock market's crashing is because the central bank is going to start raising rates, tightening their monetary policy. People are selling. What does this mean for us? But before we kind of get into that, any other question? That was an excellent question.
No, I think it's relevant to watch those things I'm going to start doing that as well because as a whole, you want to know what's going on in the stock market because as a real estate investor, when you're talking to people that have money placed somewhere, and now we're talking about private money, when you're raising private money, it's good to ask where they have their money in right now as an investments. A lot of them are putting them in CDs, so in the bank. A lot of them are putting it in the stock market because that's all they know. And so it's good to follow that. Not necessarily, I'm not saying that, hey, that's up to you. This is purely educational and we're not financial planners. But if you want to put your money into environments like the stock market, well, then you got to pay attention, So enlighten us on now that you know, and you've been following the stock market for a while, you got money invested in the stock market. So now enlighten us on like based on like what the market is doing. This whole live is about, is real estate next? Is real estate going to crash? Which I think you and I both know that probably not the case, but explain to everyone here, like why the opportunity is in front of us, especially from a real estate investor standpoint, when
Sure.
you see something like this tanking, like the stock market is.
So what's happening in the U.S. markets is really like you've heard probably the term like Magnificent Seven. Have you heard of that before?
I've heard it before, yeah.
Yeah. So these companies, these are the biggest companies in the U.S. It's NVIDIA, which is a massive chip company,
Mm-hmm.
Microsoft, which everyone's heard of, Apple, Amazon, Meta, which is Facebook, Tesla, which has actually been booted out of the Magnificent Seven because they're not a $1 trillion company anymore. They kind of came down. But then Google is the seventh one. Those are the Magnificent Seven, right? And these stock prices are at all-time highs. I mean, they were at all-time highs. They're coming down and coming back to reality today. But that's where all this money has been flowing into this Magnificent Seven. I'm talking massive, insane run-ups. I mean, look at NVIDIA. It's up like 300% probably in the last 24 months or something. Just insane where all the money's been flowing into. So now what we're going to see is just money flowing out of that because the valuations of these things are insane. In fact, just last week, it was reported Warren Buffett, who is, I think at one point, 25% of Warren Buffett's portfolio was in Apple. He sold half his stake in Apple. Been reported. So now he's sitting on 220 some odd $billion in cash, but he sold half his stake in Apple, and it was just reported like over the weekend or last week. I did a little post about that. But why? It's just logic because he's a genius, because he knows these valuations are insane. Looking at his gains, and he's like, it just makes sense to take some profits off the table, take some money out of this Magnificent Seven, these massive, insane run-ups, and they're still quality names. So it's just a rotation is probably what we're going to see in stocks. Money coming out of this high flyer tech and probably going into more household, names. You're going to see things like pharma companies do well, and just like staple companies that will continue to do well during a recession. That's pretty much what's going on. People are rotating money out of these crazy valuations in the stock market or in the tech stuff and kind of moving money around is what we're witnessing. But what's going on for real estate? So since the market's coming down, since the job market came in so weak, right, and now a recession is looming, what does that mean? It means the Fed they're already calling for an interest rate hike, or I'm sorry, an interest rate cut in September, but they're probably going to have multiple cuts, September, October, November, because it is the Fed's responsibility to protect the job market. And when you have a tight monetary policy with rising interest rates, that hurts jobs because companies are not hiring as much when they don't have access to money, right? So with the jobs market kind of showing some weakness, we're going to see the Fed cutting rates. What does that mean for real estate? Everybody, real estate's at an all-time high. The median house, this is what we're focused on. Sure, you could look at houses in California. You could look at houses, these overpriced houses. You're seeing some weakness there. Inventory is increased in places like Tampa. The amount of listings is doubled like in the last 12 months. You're seeing more inventory in these higher ticket markets. But the median, the medium price in the US continues to go up. We're at an all-time high. So with our business, and what we're most bullish on is this affordable housing market. I mean, you can't you can't buy enough of it right now. It is in such high demand, right? That the cutting of interest rates is only going to make more buyers enter the market. Because now when rates go down, more people can afford a mortgage. More people qualify when rates go down based on their income. What does a loan officer or a mortgage broker look at? Debt to income ratio. Well, when the rates come down, more people qualify. They can actually buy a house. So what is that going to do, RJ, to the prices when all these new buyers enter the market?
Where else is it going to go?
It's going to go up. So yeah, so maybe you're not going to see these giant run-ups in the stuff that's been coming down California, all these high-ticket $1 million homes. No. It's not what we're talking about. Affordable housing valued between 150, 350. That's the stuff that way more buyers are going to enter the market for that. So we're bullish. We're buying. I encourage all of you, get going now. Buy. What are you waiting for? If you're waiting, you're going to regret it. When was the best time to plant a tree? 20 years ago. True. What's the second best time to plant a tree? Today. Today, guys. Today. We are getting after it. Get these off-market deals. This is what we teach people to do. Find good deals. You make your money when you buy. You get paid when you sell or refinance. We're going to help you buy good deals. This is what we're getting after. Just put one in contract today for 50 G's. ARV, after repair value, is like 200. Where the flipping market is robust in this affordable housing space. The rental properties are thriving in this affordable housing space. I cannot stress that enough. And I love the dialogue. By the way, thank you for the subscriptions on this channel. Our channel continues to grow. I love the dialogue. You know, people are saying, you know, pushing back. They're like, I think house prices are coming down. Yes, I agree. In the higher ticket stuff, not in the affordable space. That is what we are most bullish on.
So there's a question in here, but before we get into that question, we did a training on how we're buying rentals, but we have a new training coming out next week. You don't want to miss that. And it's all going to be all about how we're able to execute the same buy and hold strategy right now with the rates doing what they're doing now. But now is the time to understand how we're doing it, because there might be a little blip in the market where the rates might come down. Who gives? Like, who cares? We're going to show you how to do this today with none of your own money. So be on the lookout for that. If you are on our socials, follow us if you haven't already. We're very active on, you know, YouTube, Instagram, and TikTok. But you don't want to miss our announcement of that. It's going to be next week sometime, probably Thursday. We're ironing out a time for that, but it's going to be a training.
Yeah.
And basically just behind the curtains on our story, but also how we're, you know, more importantly, how you can execute the strategy with receipts of how we're executing the strategy in today's market. That. But my last question is this. So real estate is not crashing. If you have some money in the market now, real stock market, like, is it wise to take it out and put it in real estate? Should it just stay in the market right now? It's crashing, because then you just hold on to it and maybe it bounces back. Before we get into some Q&A, what do you think we should do?
It's so situational, RJ. It's such a situational thing. I don't know what you're invested in. If you got all your money in the Magnificent Seven, I would have been selling 2 weeks ago, 3 weeks ago, right? I mean, but hindsight, I don't know any of that stuff. You know, and if you got good quality household names and you're long term in the stock market earning dividends, it's better than a bank account. So you can't just say, oh, pull all your money out. That's like very situational, right? And if you got a great opportunity, for instance, you're big in the whole life insurance policies. I'm going to get these things going for my kids and whatnot and myself. You could trade with that money too, you know? So I am, the people I follow, my mentor in stock investing, it is a very much swing trader environment. I'm not a long-term investor. I am a swing trader, which means you just kind of wait for you buy the dip and sell the rip. You know, it's just buying them low and selling them on the bounces. But I look at the stock market as a way to grow money, not to make money. This is a key distinction. I'm not a day trader where I'm obsessed and I'm going to like make 12 trades a day. No, I might make there's less than 12 trades a month, you know, on my end. So there's always money to be made. There's always a bull market somewhere. But I'm all about making money in real estate and then growing that money in stocks, in life insurance policies, and other vehicles. That's me, So that's it, everybody. Let's buy some houses, buy affordable housing, get involved. You make your money when you buy. No one ever got rich paying retail for anything. We're not retail buyers. We're buying wholesale. We got numerous people hitting us up, don't we, RJ, in our messages? I got to unload this house, this and that. That's cool. We're not your retail guys, though. I mean, I don't know what to tell you. We teach our students in our community. They're buying stuff. We just talked to one of our students today, RJ, right? I mean, he's in contract for $15K. House is worth all day long. The next competition for an as-is property is 60. He's looking to wholesale that thing for 29. If he can put 20K in the bank, this is the game we're playing right now, everybody. Mm-hmm. We are targeting our marketing towards affordable housing, buying everything with private money that we can fix up and do a BRRRR deal on when it makes sense, but we're monetizing everything else. Yeah. You had a cool little phrase, right? Buy what makes sense and sell the rest or something. Like, that's what we want to do, is monetize the opportunities that we're attracting, keep the ones that make the most sense, numerically and geographically. When the numbers make sense and the geography makes sense, you want to buy and hold those ones, but unload everything else, monetize everything you possibly can. The market's hot in the price ranges that we target, and it's off to the races, man. We're busy over here, right?
Yes, we are. We got a question. Do you think the money printer might start up again?
For sure.
They always do.
For sure. Yeah.
You want to be on the other. You want to be on the other side of that, but we're going to be here taking advantage of it, showing you 100%. How we're taking advantage of it. Make sure you're on that training next week on how we're taking advantage of it now, using none of our own money.
Let's go.
From my take on all of this, it's all about moving money around.
Yeah.
We move money around. We're moving money from bank accounts to real estate, then it goes back into the banks, and we're moving it back into these accounts where it grows. You want to be on the other side of it. And so follow us here. We're going to be talking about what's going on in the market. We're going to be talking about deals that we're doing, how we're doing it. And it's all in front of you. And we're here answering all your questions every week. This one is a impromptu live, but it's relevant for right now, what's going on. So if you don't have any other questions, we got to go see if this house is going to fit in the buy and hold box. We're getting it inspected, $50K purchase, probably rehab another 30 or 40. It might, depending on the inspection.
Can I just say something, RJ? I'm so grateful for each and every single one of you, especially on our YouTube channel. We are just watching. I am obsessed with adding value to you guys. I'm all over the comments. Please leave us comments. I will reply, or RJ will reply. It is such a grind, but it is so rewarding to be able to help you guys. It's keeping the fire lit in me. RJ and I have been at this for 12 years, buying and selling and renting and fixing and contractors, and we are deep in the game. But now having the opportunity to work with new people and coach new people has completely changed the game for me. I'm more motivated. I'm getting up early. I'm thinking about our subs. I'm thinking about our people. I'm replying, RJ. I'm in the office. I'm working with our students. It's like, and we're seeing real results. So thank you all so much for really just lighting me up. So grateful for this channel. And let us know if you're interested in having us mentor you and being on the phone with you multiple times a week. Our flagship program, it's less than $5,000 right now. That's probably going to go up because we want to keep it small so we can truly sink our teeth into working with people and helping you be successful. I mean, our success rate is massively high. Way over 50% of the people who get started with us are profitable, and we have the receipts, as RJ would say. We can show you, you can meet these people. This is not bogus, but it is truly become a passion of mine. I'm super excited, and let us know if you're interested in having us kind of hold your hand for your first real estate deal or for your next 5. We're getting after it every day. You can do the same.